Hello, and welcome to our market alert video for today, which is June 28, 2024. And of course, this is the day after the presidential debate. So I want to get into that. But first, let me tell you, I am Ken Moraif. I'm the founder and CEO of Retirement Planners of America. And we have a singular goal, which is to create as many squippers as we possibly can. And if you don't know what a squipper is, it is the acronym for Second Childhood Without Parental Supervision. So when a client of ours retires, we call them a squipper. And we want them to go out there and have fun, enjoy their second childhood, and let us do all the worrying for you so that you don't have to. Our website is rpoa.com. So, last night I watched the debate, as I'm sure many of you did. And, when President Biden had that moment where he couldn't complete his thought, he couldn't finish his sentence, he got so confused looking. As a human being, whether you're Republican, whether you are Democrat, your heart had to go out to him. It broke my heart to watch that. It was just very, very difficult to watch it. And this is a financial show, so I don't want to get into politics. So let me dive into that. So how does the debate and what happened there, the aftermath of that, how is that going to affect our investments? And if Joe Biden and President Trump, if President Biden and President Trump are both the nominees, how's that going to affect our investments after November? Well, one of the things we've said and continue to believe is that the stock market is apolitical. The stock market is not Republican, it's not Democrat. It's profits. The stock market cares about profits. So the candidate that represents the ability for companies to make more profits is the one the stock market likes. The one that is going to create more regulations and taxes and ways for businesses not to profit, that one is going to be the one the market does not like. Case in point, when Donald Trump was elected, he represented significant reductions in taxes, significant reductions in regulations. That means significant increases in profits. So right after he was elected, the stock market had a significant upside rally. Now let's go back to the presidential election between John Kerry and George Bush. What happened in that year was that John Kerry was actually leading in the polls heading into August. And the stock market was down significantly, a lot. I was there, I saw it. And the reason why was because John Kerry represented higher taxes, higher regulations, and things that would eat into profits, and the market did not like that. When the polls turned and George Bush got elected, or reelected, I should say, what happened was that the market went way up after that. Why? Because it was a relief that profits would continue. So keep your eye on the ball. It is profits that drive stock prices in our view, and the candidate that is most favorable for profits is the one that the market will like. So there you go. So now this year, we believe that the effect, and I'm going to assume for a moment that Joe Biden and Donald Trump are the two nominees. And if one of those guys gets elected, we don't think it's going to create a big move in the markets. Why? Because the regulations and taxes are in place, and many of them will not expire till the latter part of 2025. And stock market investors are notoriously short-sighted. They can't see beyond 6 months, and all those things will happen 6 months after. So therefore, when election time comes, there's not going to be much change in the short-term future, and therefore the effect on the market, in our view, will be muted. Now, that doesn't mean there won't be a reaction, but it'll be short-lived and should pass. So, having said that, it is always possible that everything could fall apart. It is always possible, as we've talked about in previous videos, that the Federal Reserve is going to make a big mistake, lower interest rates too late, the economy tanks into recession, we have a big bad bear market, which is exactly what happened in the 80s with Paul Volcker. That could happen. We could have a significant bear market as a result of that, regardless of the elections. So we believe you should always have a strategy to protect yourself on the downside. And of course we do. Invest and Protect is our strategy that told us to get out of the stock market in November of 2007, before the stock market crash of 2008. told us to sell literally the day before the pandemic was announced. And you know what the market did after that. Our goal is to help our clients to protect them from big, bad bear markets. And like I said, we don't believe the elections are going to be the cause of that, but very well could be the Fed making a mistake. And that's what we want to protect against. So that's our view on it. Thank you for watching this video. Share it with your friends, your family, your business associates. We want to help as many people as we possibly can. So thanks for watching, and we will talk soon.